I made $11,000 in one day trading Forex, but let me be real, it took me blowing so many accounts and years worth of grinding to get here. As you can see on the screen, this is my payout of $11,363.10, and this is also me on the global leaderboards. This video isn't to flex, I'm going to show you exactly how I did it and how you can start the right way. The sole purpose of this video is to show you a simple approach of how I view the markets. I'm not here to sell you a dream, I'm here to give you advice. I've been trading for nearly 4 years now, blown many accounts, journaled every step of the way, and I stuck to the plan. In this video, I'm going to give you a little beginner framework. We're going to be talking about my charting, journaling, talking about trading less with one pair, and we're also going to be talking about funded accounts in terms of flipping and staying consistent. Also going to be talking about why most beginner traders fail and what changed for me. So let's get straight into it. So in terms of how I view the markets, a lot of you beginners already will know the term trends, right? And now in terms of trends, we know there's an uptrend, we know there's a downtrend, and we also know there's a sideways trend as well. So let's talk about them. So obviously we've got bullish trend where price is moving up. We've got bearish trend where price is moving down, and we also have sideways price, which is also known as consolidation, accumulation, ranging, whatever you want to call it, I don't care, right? So we know price can either move up, down, or sideways. So let's dive a bit further. Let's talk about the bullish trend. So we know in a bullish trend, price is literally just making higher highs and higher lows. You all probably know this, but a lot of you don't really understand how to use this on the chart because a lot of you know this, but when it comes to the chart, you just completely ignore it. You don't use it in your favor and you kind of lose a lot of trades. So in this situation, we understand that each time price goes up, it is breaking to the upside. Now, whether you want to call this a break of structure, a break, change of character, you know, there's different types of terms in trading, but obviously we're going to keep it simple. I'm going to call it break. So every time price does break structure to the upside, I will always expect the low which created the break to hold every single time. And I'll expect price to come retrace back into the range, push out, retrace back into the range, push out. Now let's say this is like, for example, the 1 hour time frame. Inside here, we're going to see the same exact thing reversed. So if I zoom into this leg of price right here, on the lower time frame, it's actually going to look like this. Now, somewhere within here, I want to see the switch from bearish to bullish, which means I want to see price going from lower lows and lower highs to now higher highs and higher lows. And in there, that's going to be my confirmation to then trade towards this high up here. So I want to see internally then price moving from lower lows to lower highs to then higher highs and higher lows like that. And then the situation here where it does make that break is my confirmation to then trade towards this high up here. This is the most simple way to put it, and this is literally what I do every single day in the charts. A lot of you, I think, understand this, but again, like I said, a lot of you don't acknowledge it when it comes to the real life markets, and you know, a lot of time you do lose because let's say the 1 hour is moving like this, and then you're trying to sell all the way down on the 1 minute, and then you lose. So we talked about the bullish structure. Obviously, that's going to be the exact same for the bearish structure, just vice versa. Now let's talk about the ranging market, you know, the sideways structure. In terms of this then, we know in a bullish structure, price is going to be breaking to upside. And we know for bearish structure, price is going to be breaking to the downside. When it comes to the sideways market, we can see here that price is failing to break to the upside and it's failing to break to the downside. So what does this mean? This means price is going to be stuck, and then obviously trades within this are probably going to be low probability in terms of structure, because you don't have any higher or lower targets. So if you're trying to catch some trades in the lower time frame, you don't actually know which side is going to be the correct target unless one way, which I do. And that way that I use is abusing the sweep. If I see that price is ranging like this, whereas, you know, not really making new highs, not really making new lows, I will want to abuse sweeps. I want to see a one-sided target for price. So of course, like I was saying, if we get a break to the upside, I'm expecting this low to hold. For example, if price does end up sweeping this low, that will leave then a one-sided target for me to try and trade up towards that. And then obviously in here, I can catch my lower time frame setups towards this high to the left here. So now I've shown you some basic drawing examples of how I view the markets. Let me show you some examples on the charts. So I told you all about a break to the upside when we're in bullish structure market. But what I didn't tell you is how I view the markets, whether we get a break or whether we get a failed break. But if I see price fail to break this high, whether we go past it and we just get a sweep, or if price, you know, really goes up to it like around here and then, you know, really fails to close past it and go down, what do? I then have this low as my structure draw rather than this high. And obviously then I need to use lower time frame stuff to confirm that. But this is how I do it. So I either trade up towards this high or I either trade up towards this low, depending on whether we get the low time frame shifts in here, which confirms me trading up towards this high. But then as we get up here, we'll then see if we either sweep it, we don't break it, you know, like price comes near it, or we get the break and then we continue down expecting this low to hold and then push out further. So that's how I literally view the markets every day. So let's look at it in the chart now in the most basic way possible. So we can see here, in terms of this, we've got this high and we also have this low. Now this is on the 1 minute time frame. Obviously I need to use like the 15-minute as well. So if I go into the 15-minute, we can see here, we've got a break. If I go to the 30-minute, we can see we've just got full wicks. Why? Because there is no candle closure below it. So what does that mean for this high? Well, it means this high here has failed to put in a new low. It's failed to create a lower low, which then indicates this being my draw for price. And then in them situations, you can try and find lower time frame setups towards this high down here. And as you can see right here, we've got this break. We also have POIs into here where we can enter from, as well as price sweeping it, which is an added confluence for me. So whether you enter off POIs on there, which is, you know, nice confirmation, or this sweep, which is an added confluence as well for me, because I noticed a lot of my losses, it kept sweeping me out and then hitting TP, which is again something which I did in my criteria. As you can see here, sweep entry, right? This is the importance of journaling, which I'll get onto. So as you can see, low time frame move based off my draw being there on the 30-minute time frame, really nice towards it. Very, very simple stuff, right? And I will literally do this over and over again. Another good example is on, I think it was on USD JPY. We have this break, and we can see on the 15-minute time frame, price came all the way up here, and then we ended up breaking it, right? So then I'm expecting this low to hold. We then, price then came down back into the range of the break and then pushed out here. But what do we notice about this high? Okay, originally we swept it, price failed to put in a new high, which again is a potential confirmation for this low being a draw because it's failed to put in a new high. Then price comes down and tries to retest it. But again, using the time frames together, for example, the 30-minute alongside the 15-minute, we can see again we're getting more sweeps. Price then, what do? On the lower time frames, we're again breaking down lower, which is a confirmation for this low being a draw for price. Then what happens? Price failed to make new highs, which obviously this was the draw for price. Then price comes down back to the low, which created the new high overall. But because overall, this is part of the range, which created the new high from this low. So now when price came down, what do we notice here? If we zoom in and draw this line across, we're getting small breaks on the 50-minute time frame. So what does that potentially mean on the 30-minute and 1 hour? On the 30-minute, again, we're getting small breaks. And on the 1 hour, again, we're getting small, tiny breaks with big wicks. So what's this an indication of? Being a sweep. If you go on the 4 hour as well, we can see no candle closures, right? This is a sweep, which then what does that mean? This high up here failed to put in a new low, failed to make a lower low, which then is an indication for price going up towards this high. And then obviously then we can see internally, what can we see? Price breaking out all these lows and then pushing up. Very nice stuff. Literally this is just how I view the markets each day. I look for breaks, I look for sweeps, I look for price fading to reach certain points. And obviously then I use that mid time frame stuff with the low time frame alongside the high time frame as well. Very simple stuff. And I think when it comes to this, a lot of you actually know this, but again, a lot of you don't acknowledge it in your trading, or you ignore it and you try and not trade with structure on the side. You don't try and not trade with the trend. And then that's when you end up getting your losing trades, because a lot of you will see this and you'll see this big bearish push. And then when you get to this low, you know, price fading to break it in terms of the structure, then price is like moving up and down. You're going to be trying to look for sells and then you get stopped out and you're thinking why? But then obviously this was the structure of it recently. For example, with GU, Yes, price went overall bearish down here, but what happened recently on the 15-minute time frame? We failed to break this low. We failed to make a lower low, which then indicated price to run up higher there. Also, price ran up into this high time frame range, which obviously I won't talk too much about because it might confuse a lot of you, but price needed a retracement, also failing to make a lower low. It made sense for price to run higher up. But again, this is something I think a lot of you do know, but you just kind of, choose to ignore it, basically. So that's the simple blueprint of what I do. Bullish structure, bearish structure, and also sideways market. So that's the most basic way I view the charts. Of course, there is a lot more to it. I was just explaining it in the most simple way possible for you all to keep this as short as possible. If you do want to see more charting videos of how I approach the markets, let me know in the comments. I will definitely, do more of them. So now we've done the charting out of the way, let's talk about the journaling, because it's all good learning concepts, it's all good knowing how to view the markets, your technical analysis. But when it comes to journaling, this is going to be the most important thing, because if you do not journal your trades, that means you are not collecting data, you are not collecting criteria on your trades. So basically, you are then approaching each day basically gambling. If you do not have data, you don't know what trades you're going to be taking or what trades you should be taking because you do not have a system that you're going to be following. I promise you, you cannot be profitable with just a PDF of a strategy. If I sent you a picture of my strategy, one of my entry models, I guarantee you, you will not be profitable if you do not journal and collect data. Yes, you can learn a blueprint, but still you need to be doing hard work yourself. So when it comes to journaling, a lot of you are only doing this where you're taking a picture of the trade, writing the date, writing the pair, writing the session. This is very poor data collection because when you then come back to it, you're not seeing the criteria of each trade. You're not seeing why the losers lose and why the winners win. You're going to be coming back to it, not understanding what went wrong, what went right, and how you can learn from in the future to refine your system. Because when you come back to it, you see a picture, what else is there? What's this picture going to tell you, right? This is the bare minimum. The real data collection is when you write down all the criteria, lots of different stuff. There's more stuff to the right as well, which I won't show. Obviously, private. But yeah, you get the point. This is real data collection, not this. This is the bare minimum. So remember, journaling, data collection is very, very important because that's how you're going to refine your system. That's how you're going to get your edge in the markets, because we all trade a very different way. We could trade the same strategy as someone else, but still we're going to have different outcomes. Why? Because we all have our own edge. Now, that's that done. We understand the charting, the journaling, right? Now it comes up down to one pair trading less, because this is something which I have started to do. I used to trade three pairs. I used to trade GBP USD, GBP AUD, and also GBP JPY. Now, I only trade GU. So we've now talked about my basic charting. We've also talked about the importance of collecting data. Now let's talk about this one pair trading less, because this is something which I have recently done. I used to trade three pairs. I used to trade GBP USD, GBP JPY, and also GBP AUD. Now I only trade GBP USD. Why? Because I've worked out with me and my system, GBP USD gets the most wins. And overall, it's better for me for my trading because it's a major pair. The spreads are better. Obviously, I've got the more wins. And also, I can use DXY alongside with it very, very nicely. And I think for a lot of beginners as well, it's important to just stick with one pair, because if you're trading on multiple pairs, it can get overwhelming. If you're on the charts, all the time, doing different analysis and stuff, you're not really focused on one. You can't really get a proper, good, detailed analysis with one pair. And also as well, it's important to remember there is no direct correlation between trading more and getting more results. Yes, if you trade more, you're going to get more wins. But does that actually mean you're going to get more wins? You're also going to get more losses as well. I promise you, there isn't really a direct correlation between them, right? It's all about your system, your data. If you find that you're trading with more pairs better based off data, you know what? I'll hold my hands up and go for it. But there is no direct correlation between trading more and getting more results, okay? Now, let's talk about the funded account methods, because a lot of you are trying to do this. A lot of you are trying to flip. You're not trying to stay consistent, right? I know it's frustrating at the start when you're trading the evaluations, right? And you basically just want to pass, because basically when you're trading the evals, you're not really making any money. You're basically trading demo until you pass it. And even when you pass it, you're still trading demo essentially. Obviously, you can just make money from it. But let's talk about it. On social media right now, so many people are promoting full porting evaluations, risking heavily on the evaluations to pass it quickly, because obviously as you get further into your trading career, you are going to get to a point where passing fundeds becomes extremely boring and they feel like a waste of time. I understand that, right? But during your beginner stage, it is very important that you do not do this, because these funded evaluations actually give us character development in trading and they help us with our psychology. We know with funded accounts, there are rules, right? Drawdown rules, and there's lots of other different types of restrictions. So now let's talk about the funded accounts, because I'm sure a lot of you here will be doing the funded account approach, but a lot of you are being taught the wrong way. Right now on social media, so many people are promoting full porting evaluations and increasing risk massively, where it comes to the point where a lot of people think this is a normal thing to do. I promise you, as a beginner trader, you should not be doing this. The evaluations are actually here to help us. They give us character development in trading and they will help us with our psychology problems. We know on evaluations there are a lot of rules in terms of drawdown rules. You can't reach max drawdown, potentially 5% in one day, 10% overall. And we also know there's lots of other different types of restrictions. What can this help us with? Well, with these funded accounts, they can actually teach us to survive. Why? Because we have to follow rules, right? Each rule which is in place is there for us to abide. If we fail it, we breach the account. So we're shown how to survive on the markets by following rules. But if you are gambling your evaluations or full porting them, you're basically trading like there are no rules. So then when you come to the live funded accounts, you are going to be cooked because you do not know how to get consistent payouts. Because all you know how to do is pass an account as quickly as possible or fail an account as quickly as possible. Trust me when I say this, do not try and fast track evaluations until you have proven that you can do it properly, or you have so many funded accounts to the point where evaluation passing becomes so boring that you just need to do it. I understand passing evaluations as a more experienced trader is a bit of a waste of time because you're not making money from it. But as a beginner trader, you definitely do not want to be doing this because you're just going to go through a cycle of blowing so many accounts and losing a lot of money. And that's something you do not want to do because you're just going to damage your psychology massively. Use all that time to practice surviving on an account, so when you get to the live funding stage, you know how to sustain that and how to get consistent payouts, rather than that person who's going to gamble the evaluations, pass based off of luck, and then when they get to the live funded stage, they no longer need to pass quick. Now they need to stay consistent and be a profitable trader. They don't know how to do that. So then they get into drawdown and their psychology goes out the window, they blow the account, and then they have to do it again. You do not want to be that person that just gets one lucky payout, or maybe not even get a payout at all, than the person who's able to keep an account for a longer period of time and get consistently paid each month. I promise you. So that's that done. Now let's talk about the two common questions a lot of people ask me. Why most beginner traders fail and what changed for me. So when it comes to why most beginner traders fail, there's lots of different factors which can answer that question, but I'm going to tell you the few main pointers. I think one of the biggest things is that a lot of beginners expect fast success when it comes to Wi-Fi money, online money, anything you can make money online. A lot of people think it happens quickly and think it doesn't need to take that much hard work for a longer period of time. But when it comes to trading, this takes time. I promise you, you cannot be profitable within 6 months of trading. I don't care what anyone tells you. You cannot be profitable within 6 months of trading. You may pass a funded, you may get a payout, but in terms of being profitable, you are not profitable until after at least 1 year's worth of consistent trading, to the point where you've got your system and you know your system to the back of your hand, because you might have a system which works for 1 year, right? But then the next year, it might go all wrong. For me, I had to refine my system heavily this year. And obviously it's played out. Why? Because I made refinements. That's the importance of collecting data and journaling, like I was saying at the start. But I promise you, don't expect fast success of this. Expect it to take a long time, because then if you're so focused on, I need to get this much amount of money within this many months, it's going to massively affect your trading, because now you're going to put a deadline pressure on your work. And then obviously you're not going to trade as properly as you should do. The second reason to why most beginner traders fail is because everyone tries to lose less. Of course we do. That's how we refine our system. We're trying to reduce the losses, get more wins. But when I say lose less, I'm talking about the winners. A lot of people try to have a 100% win rate strategy. I promise you that does not exist. You will lose, and it's okay to lose. Remember, it's normal. Losing in trading is completely normal, but a lot of people don't really show too much losses online to the point where a lot of beginners think it's not normal to lose. I promise you, your favorite trader on socials loses. I lose all the time. The best traders in the world lose. Everyone loses, and you need to accept that, okay? And lastly, like I was saying at the start with data collection and journaling, a lot of beginner traders also fail based off lack of data. I promise you, it's such a very simple thing to do. Collecting your data is very, very important. But so many people think they're too good to collect data. They're too good to journal. I promise you, you are never too good to collect data on your trades. This is how you improve. This is why we build our system. Losses are here for us to create a system where you can potentially reduce our losses and create an edge in the markets to gain more wins. Without journaling, without collecting data, it's physically impossible to do that. Now, before we wrap up the video, let's talk about what changed for me, because this, which I'm about to say, is genuinely the biggest change I have made in my mindset, which has allowed me to progress so much further in my trading. And it's losing my trading, and it's the art of acceptance, right? The art of accepting losses. Like I was saying before, if you have a system which you follow to the T each day, some days you may make a mistake, it's okay. But if you have a system which you plan to follow each day and you follow that system, whether you win, whether you lose, or whether you hit a break even for that day, or whether you don't even take a trade at all, if you follow that system and accept that whether the outcome, you are okay with it and you are happy because you follow that system. I promise you, I turn up to the markets, I lose a trade, I'm not phased. I'm not happy that I lost, but I'm to the point where you could so-called maybe even call it happy because I'm not sad. Where someone may ask me if I lost a trade, are you okay? Like, how do you feel that you lost a trade? I will literally say, I feel absolutely nothing. I follow my system. I'm happy that I follow my system. So therefore, I'm potentially happy for a loss because I follow my system. Not specifically happy for the loss outcome itself, but because I followed the system, even though it lost, I'm happy, right? I promise you, if you accept that each day, whether you win, lose, take a trade, it's a break even, or you don't even take a trade, right? And you accept that, that is going to change for you. And it changed for me massively. And that's how I've been able to progress so much further. So we're now coming to the end of the video. If you've got more YouTube ideas you want for me to do, feel free to leave it in the comments below. Don't forget to like and subscribe. The whole point of this video, remember, I made 11K, but what matters is more how I did it. If you're just starting, don't chase the money. Chase improving every day. If you just focus on becoming a better trader every single day, I promise you, there's no reason to why you can't be profitable, right? But that being said, don't forget to like and subscribe, and I'll see you all in the next video.